All right. Very good evening to each and every one of you present for today's third live streaming session. I just want to make sure that my voice is audible. I mean, I hope people can see me and I hope we are not facing any kind of technical glitches. All right, I think everything is good to go. All right, let's start today's live streaming session, today's third live streaming session. Let me give you a quick introduction about myself. I am Harsh. I have 8 years of trading experience. I mainly trade the Forex pairs such as euro dollar, pound dollar, dollar Swiss, dollar yen, and so on. I even look at the commodity markets such as oil, gold, silver, copper, as well as US based indices, right? We have the S&P 500, the Dow Jones 30, and the Nasdaq 100. Currently, we are also looking at the Indian share market where we analyze the Indian indices, right? Such as Nifty and Sensex, as well as we identify individual Indian stocks as well. I am more of a technical trader. I specialize in technical analysis. There are many components or aspects when it comes to technical analysis, and I specialize in certain analysis, certain aspects such as supply and demand, price action, order flow analysis, swing analysis, elite wave analysis, and Fibonacci retracement analysis. These are some of the sectors that I specialize in. When it comes to technical analysis, it is quite extensive and exhaustive, correct? I am blessed to be, mentored and to be guided by some of the best minds in the financial industry. I have had the privilege to be trained under people who used to work as floor traders, right? People who used to trade on the Chicago Mercantile Exchange. So I'm truly fortunate and blessed in terms of having such, bright-minded people who were, able to provide me with experience and exposure to the financial markets. I have been successful in handling around $20 million worth of portfolios, and I have been able to generate around 30 to 35% of profit over an annual basis. The reason we have been disclosing all this information is so that you can be rest assured that yes, you are under safe hands, correct? You have people who have the right knowledge, the right experience, and the right expertise, right? When it comes to the financial markets. So I hope everyone has been present for today's first and second live streaming session as well. Currently, this is the third live streaming session that is taking place. And like I always mention, the third live streaming session takes place after the stock market has closed, right? Once the stock market has been closed and dusted for today, we shift our focus from providing you opportunities to providing you education. All right. So before we continue, I hope everyone is having a good time. If any one of you have any difficulty in understanding, if you have a language barrier, or if you think that English is not the best language that you can understand, अगर आपको लगता है कि मैं हिंदी में भी ज़्यादा बात करूं, तो प्लीज़ आप कमेंट बॉक्स में जाके आप लिखिए वहाँ पे कि Harsh, please talk in Hindi as well, because I need to make sure we have a big community with a lot of people, who are going to be attending on a day-to-day basis. तो मैं आपको रिक्वेस्ट करूंगा कि अगर आपको कोई भी प्रॉब्लम आ रही है in terms of understanding, please comment box में लिखिए. All right, so I can make sure that I'm catering to each and every one of this particular community, right? That we are fostering to generate and build a relationship with. So let me start by, I know the markets are closed, but very crucial to understand from, the viewer's point of view. Let me ask you a question. Do you think it is easy to make money in the stock market, or is it not easy? It's hard to make money in the stock market. If you feel it's easy to make money in the stock market, you can type one in the chat box. And if you feel that it is hard, or maybe you do not know how money can be made in the financial markets, you can write number two in the chat box. All right, keep letting your comments flow in, because I will be looking at your comments and I would be needing to have an interaction between me and you, correct? These live streaming sessions that we are having is based on interaction, so that you can learn from me and I can understand your doubts and your queries, and I can try to do my best in terms of resolving those doubts. All right, so definitely a lot of you people have written that, Harsh, we do understand that yes, we can make money in the financial markets, but we do not know how, or maybe we have not been successful enough. And that is exactly the reason Harsh at Dolphin Markets is conducting these live streaming sessions, so that you can analyze our trading potential, right? We always focus on showcasing our credibility, right? When it comes to the financial markets. Very important to understand, because the entire crux of us having and conducting these live streaming sessions is to showcase our potential, our trading capability on a real time basis, right? We are talking about certain trades that have been placed as recent as last week's Thursday, right? For trades that have been taken and have been squared off at a profit, right? We have made good money. So, people, I hope you can see my screen, where certain trades which were provided to you last week were able to make a good amount of profits. We are talking of almost 12% in the last 2 days, right? Last Thursday and last Friday. This is just to showcase the and to create an awareness among the community that yes, it is possible to make money in the financial markets, provided you attend these live streaming sessions. The more you attend these live streaming sessions, the more exposure you will be, able to attain in terms of us providing you with hot stock opportunities, right? We have been providing you with hot stock recommendations all the way from 18th of September. Today is the 14th of November. So for almost 2 months, we have been capable of generating consistent profits, right? We haven't made such strong profitabilities on one or two or three trades. We have made consistent returns over the span of 2 months, and have been able to generate a cumulative profitability of 135%, right? That is humongous. That is quite extraordinary. I'm pretty sure there might be no brokerage firm or a financial instrument that I am aware of that is able to provide with such strong profitabilities in such short amount of time. Remember, just 2 months, and we are already hitting the 100% plus profitability, class level. So these are the trades that we provide to you on a day to day, on a regular basis, right? All the way from 18th till 18th of September to 7th of November. These are the trades which have been taken and have been squared off. They have been closed at a profit, and we are pretty clear and very very confident about it in terms of making money consistently, right? We are not people who are playing just on one or two trades and are planning to go all in to make money. We are not gamblers. We are analysts, we are traders, and our duty is to provide you with trading recommendations based on a clear structure with risk management in place. So when you have structure, risk management, and discipline in terms of consistency, you can also attain the same kind of profits that we have been able to showcase to you, right? So this is the crux, this is the entire point of us having these live streaming sessions. There are certain trades which are running, and these trades are currently the ones that are not running in our favor. Remember, the stock market runs on probabilities. The stock market does not run on certainties, correct? And that is the reason, as and how the markets are improvising, we will provide you with updates in terms of what next step has to be taken, correct? So this has been a clear and a brief, explanation as to why we are having the live streaming sessions. Since I had mentioned to you earlier, I am providing you three live trading sessions, correct? So the first and the second streaming sessions take place when the stock market, when the Indian stock market is open. During the sessions, we check for markets, we analyze the markets, and if I come across a hot stock opportunity, I will provide to you, right? But for the third live streaming session, the one that is currently happening right now, since the markets are closed, we shift our attention from providing you with trading opportunities to education. And today's topic is going to be none other than introduction to Forex and gold markets. As all of you are aware, we at Dolphin Markets are providing you with a Forex brokerage platform, right? Using our services, you can trade the Forex, gold, and CFD markets. Today, we are going to be talking more about FX, right? Forex, gold, and CFD markets. So, let us start today's session. People are aware that yes, they are aware of the Indian stock market. They are aware of indices such as Nifty, such as Sensex. But with the current sentiment, right, I hope people are aware, with the current sentiment being bearish almost since the end of September, there are a lot of macroeconomic factors, right, which are currently playing, such as geopolitical uncertainties across the globe, FIIs, the foreign investment institutions, pulling out funds from the Indian economy, and poor quarterly earning reports, right? So many companies which have been showcasing their quarterly earning reports have been underperforming. So there is a lot of uncertainty, sorry, there is a lot of pessimism when it comes to the current phase of the Indian economy. So people often come back to me and ask, like, Harsh, we know that the Indian stock market currently is not performing well, so how can we make more money? How are there any other opportunities in other markets that we can capitalize on? And to them I say, yes, that is what exactly we are focusing on. We are providing you with Indian hot stock recommendations for the Indian stock market, but our main focus lies in Forex, gold, and the CFD markets. Remember, we are just entering into the Indian market, and to entice and to make people aware that yes, Harsh, as well as Dolphin Markets are able to provide with credibility in terms of consistency, right? Based on our analysis sheet, they are able to provide 135% profitability in just 2 months. We can provide you with much better returns, much more opportunities in the Forex and gold markets, right? When I'm talking about the Forex, gold, and CFD markets, I'm just going to talk about in general, and we are going to use one term that would be named as FX, right? Forex markets. It encompasses everything, right? So the Forex market includes Forex, includes gold, and includes CFD markets as well. So that is the reason when people are, looking at the markets, and they are being skeptical in terms of, look, Harsh, since the end of September, we have already seen a correction of almost 9%. This is on the Sensex, correct? If you go and look at the Nifty, the correction has been even, broader, almost coming to 10.5% correction, right? So they want to know more about Forex. And that is the reason today's discussion will be focusing on Forex, right? I hope people are aware, and we had talked a lot about these points. Let me delete the drawings. Yes, I use a lot of drawings, and we will be talking about, what are some of the restrictions when it comes to the Indian share market, and how there are advantages, right, compared to the Forex market. So as you can see, let me change the color. First of all, everyone is aware in terms of restrictions, we are pretty clear that uh, in the English share market, in order to hold trades for the next day, you can only purchase a share. Yes, shorting is allowed, but only during intraday. So there is the first restriction that only longs can be taken if you want to hold trades for the next day, for the next week, and so on. If you want to take delivery, right? That is the term that is used. Then, like I said, shorts can be taken, but only intraday. So you cannot hold a short trade for the next day. The broker will automatically square off your short trade on whichever stock you take by the end of the market closure, right? Right between 3:15 to 3:30, the broker will start squaring off short trade because it is not allowed to carry it to the next day. In terms of leverage, we have only a leverage of 1 is to 5, and that's to only during intraday sessions, right? If you're intraday trading, you get a leverage of 5 times your account balance, correct? So if you had 100 rupees, you are able to have a purchasing power of 500 rupees. That is what is meant by 1 is to 5. And but again, it falls down drastically if you are going to hold it for the next day. The leverage reduces just to 1 is to 1. So you do not get leverage even for holding trades. It is only applicable for intraday trading. The timings of the share markets are between 9:15 in the morning till 3:30 in the afternoon. So you are allowed to take trades only during the market hours. So these are certain restrictions when it comes to the stock market, correct? But in terms of the advantages, right, of the forex market, that is where people are telling Harsh, we want to know other markets where there are better opportunities and there are better conducive scenarios which can help people in trading, and that is what we are going to talk about. So advantages of forex gold and the CFD markets are that you are allowed to take long and short. So that is, and we do not have any restriction when it comes to holding trades. So you can hold trades indefinitely, whether it is a long trade or a short trade. You are allowed to hold trades indefinitely. Unlike the English share market, where you can only hold longs, you can or you can take shorts, but only trade intraday. So this is a major drawback when it comes to the English share market. But when it comes to the forex, gold, and CFD markets, we are allowed to take longs and shorts, as well as we are allowed to hold those long and short trades indefinitely. In terms of leverage, when you are getting a leverage of 1 is to 5 in the Indian share market, that too on an intraday basis, here you are getting a very charitable kind of leverage, like a very interesting and very wholehearted leverage of 1 is to 100, minimum 1 is to 100. I'm pretty sure there are other brokers out there who are even providing way too much leverage in terms of 1 is to 1000, 1 is to 5000, so on and so forth. But nonetheless, compared to the Indian share market, we are getting very good leverage in the forex markets, correct? And the benefit is that it is not intraday. You can hold it indefinitely and you will still have a leverage of 1 is to 100. There is just a small clause when it comes to leverage, when there are certain news events, right? Such as we recently had the US elections. So when there are certain market conditions where there is uncertainty in terms of expected over volatility, that is the only time when your broker might reduce the leverage. But overall, in general, your leverage is unlimited. It does not decrease based on intraday, or if you're going to hold trades for the next day, next week, or even the next month. When it comes to timings, unlike the Indian share market, which has only 6 hours of trading time between 9:15 a.m. in the morning and 3:30 p.m. in the afternoon, we get a time flexibility of 24 by 5. So the markets are open right from midnight to the next day's midnight. So technically speaking, you are getting 24 hours to take trades on the forex market. So that is commendable, right? That is very, very crucial, because when we are looking at people who are trading in the English share market, the biggest concern that I get is when they come back to me and they ask, like, Harsh, the only drawback of the English share market is that when I'm working, the markets are open. When I finish working, the markets are closed. So they have a hard time when it comes to managing their work or their life and the responsibilities and trading. So to them, the forex market is, the best option. So you can trade in the mornings, you can trade in the afternoons, you can trade in the evenings, right? There is no limit. You can trade at night, you can trade at midnight. What I'm trying to say is, no matter whether you're working, whether you are busy with commitments, whether you are busy with responsibilities, you will get a time period where you can trade and make money as well. You do not even have to worry, because once you are associated with dolphin markets, we will provide you with trading recommendations, right? Hot stock recommendations, money making strategies. All you would have to do is just follow our instructions, and the rest will be just about making money. So these are certain points that were of crucial importance, right? So where we have certain restrictions in the English share market, we have some advantages when it comes to the forex markets. Let us look at some more points and details, and then we will look at the charts as well. All right, so let me open my document, and here are some of the key features that I would be wanting to focus, right? So some of the differences. I have discussed the majority of differences, but let us have a little more elaborate discussion when it comes to the key differences between forex and stock trading, right? Indian stock trading. So first is asset to trade. Like we said, in forex, it's more about currencies, and here in terms of the share market, it's shares or units of ownership. Trading hours, like I had mentioned, almost 24 hours, right? From Monday till Friday. Remember, the forex markets are open for 5 days a week. Saturdays and Sundays, the markets are closed. All right. But the trading hours for the stock market is only during the stock market timings, correct? Now, leverage, as I talked to you, we are getting a leverage of 1 is to 100 when it comes to the forex markets. But when it comes to the stock markets, I mentioned it's only 1 is to 5, and that too only for intraday. If you are planning to hold your trades for the next couple of days or even the next trading day, you will not be able to get a leverage of 1 is to 5. Your leverage will decrease to 1 is to 1. All right. Volatility. Now, in terms of currency markets, volatility is on the higher side. When it comes to the England stock market, it ranges from low to high, depending upon whether it's a small cap, mid cap, or a large cap. So, certain large cap companies, the blue chip companies, will be less volatile. And if you're going for some new mid cap or small cap companies, they might have more volatility. When it comes to liquidity, this is very crucial and important to understand. Over $7 trillion, okay, daily trading volume. On an average, the daily trading volume exceeds $7 billion, right? When in the stock market, it might just be in hundreds of millions, if not billions, right? We are talking in terms of trillions in the forex market and hundreds of millions in the Indian share market, correct? And when it comes to the influencing factors which affect price movement, right? For the forex market, it is primarily influenced by international economic trends and political changes. But when it comes to the stock market, it is mainly based on the company, the industry, the sector, the macroeconomic and market sentiment, right? Now, in terms of cost, when it comes to forex and the stock market, the cost for forex trading is comparatively cheaper, not just comparatively, quite elaboratively it is on the cheaper side. But when it comes to stock trading, you require more capital, you require huge funds, and you even have to pay with spreads and commissions, right, to your brokerage firm. So these are some of the points which should be, by clear by now, in terms of, yes, there are significant differences when it comes to the forex and the the England stock market, mainly the timings, the leverage, and the cost. All right. Now, some of the advantages of the FX markets, right? As we had mentioned before, we have flexible trading hours. You can trade in the morning, evening, afternoon, night, midnight, whatever suits your schedule, correct? Low barriers to entry. As I showcased you, the cost for Forex is only based on the spread. So it is much cheaper in terms of entering into the Forex markets when compared to the stock market, right? The England stock market requires more capital. You can make profit from both rising and falling markets, right? So the best part about forex markets are that whether the markets are going bullish or whether the markets are going bearish, in the forex markets you can make money both ways, whether prices are going bullish or bearish. So that is a very positive advantage when we are talking about the forex markets. In terms of leverage options, I had told you a meager 1 is to 5 in the English share market, that too on an intraday basis. But when it comes to the forex markets, a minimum leverage of 1 is to 100. Then hedging options. So in the forex markets, you are allowed to hedge in terms of, if you have a long position, you can take a short position as well. This is not possible in the England share market. If you are having positions in the England stock market, if you want to hedge, you have to hedge it on another instrument. You cannot hedge it in the same instrument, right? In the same England stock market. But in forex, you can have long positions and short positions simultaneously. That is also very incredible. Low trading fees, it is very, comparatively, not just comparatively, it is quite adequately cheaper to get into the forex markets when comparing it to the stock market. And lots of support from community and tools available, because the forex market is so huge, right? It is huge, it is expansive in terms of, just based on the liquidity, you are looking at a daily turnover of $7 trillion. So with so much of liquidity into the markets, a lot of people are looking at the forex market. So there are a lot of communities and people and tools which are available, which are of significance, right? So these are some of the points which have been important to understand, right? What is the key difference between Forex and the England stock market? Now let us go and look at how, when I'm talking about the Forex markets, please be aware that we are talking about everything, right? We are talking about forex, we are talking about gold, and we are talking about CFDs. So I'm pretty sure people are aware in terms of how gold had been almost, in a very clear bullish move, right? All the way from, last year onwards, 2023, mid of 2023, the prices have been, soaring to the sky. One main reason is because of geopolitical unrest. You are aware, right? There is a lot of uncertainty when it comes to, certain countries having their geopolitical issues, but nonetheless prices of, people had been investing, people had been buying a lot of gold, because gold is a safe haven. And when there are such uncertainties at a global level, the people, the institutions, the investors, they rush towards gold, because gold is a safe haven, right? Nonetheless, since Mr. Trump has come into power after winning the US elections, there has been an outburst of optimism when it comes to the US indices. The US economy has been getting a lot of optimism, and because of that, now people have started to take out their funds from the gold markets and invest it into the US economy, right? In stocks, in indices, so on and so forth. So currently, the fall that you can see right from the time Mr. Trump had come into power, we could see that there has been a correction on gold. But nonetheless, gold being a safe haven, eventually the prices of gold will rise. So we were looking at gold also, and we had also had a good amount of discussion where we had expected prices to do to we had speculated the direction if Mr. Trump wins, such and such thing will happen, and if Mrs. Kamala Harris wins, what would be the output of it. But nonetheless, the markets are doing what they have to do. So let me delete the lines. And prices had come very close, right, to the 2,800 level. That is quite intense compared to when prices were just at a meager 1,600, or even going all the way down to 1,500 or 1,150. That just showcases, because gold is scarce in nature, gold is limited, the value of gold will keep on rising. Yes, you will be having corrections, but nonetheless, the overall sentiment, when I look at it from a bigger time frame, right, such as the monthly, you can clearly see the prices of gold at one point in time, maybe in the year 1990, right, when I was like born around that time, the price of gold was just at 400. Right now, we are sitting at a value of 2,800. This just showcases that we can trade such markets where we are allowed to take longs as well as shorts, right? We do not have any restriction when it comes to taking trades. Now let us look at some euro pair, forex pairs, right? So first and foremost, we would be starting with the main pair, right? The euro dollar. I'm pretty sure everyone who has heard something about the forex market would be talking about euro dollar, because euro dollar is the most heavily traded forex pair in the world, right? Euro dollar accounts for almost 27%, if I'm not wrong. If I'm right, let me type it down. So, in terms of euro dollar accounts for, let me type it out, please. Euro dollar accounts for 27% of forex transactions, right? So I'm sure everyone is aware that every country has its own currency, and transaction, one second, transactions. So every country has its own currency, but in the forex markets, we are mainly focusing on pairs which have more volatility, right? More liquidity as well. So a pair like euro dollar is one of the most favorite pairs of for a lot of forex traders, because this pair is having the tightest spreads, right? As I showcased to you in the previous data, it had mentioned that in terms of cost of entering the forex markets, it's quite cheaper, and for and euro dollar is the best and the cheapest pair when it comes to forex trading. All right, so the markets, the forex markets, with its advantages, we want to capitalize on these advantages as well. Remember, what we are providing to you during the first and second live streaming sessions are focused towards the English share market, right? Once the English share market has been settled for the day, we focus on the forex and gold markets. Currently, we will be talking more from an education point of view, but as and how time progresses, do not worry. For people who have been asking, Harsh, are you going to provide trading opportunities or trade hot stock recommendations on gold and forex? Yes, we would be providing, right? Just across the corner in the near future, we would be providing you with trading opportunities on gold, forex, and the CFD option pairs as well. People who are asking what is CFD, let me just showcase you. CFDs are basically certificate for difference. Like, people are aware that like how in the Indian market we have indices such as Nifty and Sensex. Similarly, we in the US, remember we are talking about the international markets, right? So we have the US index, which is called as the S&P 500, right? So, for example, if I open the first one, right, we are allowed to trade such products, right? So these products, which are basically derived from the stock market, right? It is derived from the S&P index, which is listed on the New York Stock Exchange, correct? So such indices which are replicated for us to take trades on, they are called as CFD, right? Which is basically meaning a certificate for difference. Do not get into the actual and literal meaning. It does not make much of a difference. What difference makes is, are you able to just understand the base of what a CFD is, and eventually our focus will be on making money, correct? But this is for your information. It is very crucial to understand. Let us get back to the euro pairs. Sorry, the forex pairs. I get so used to talking about euro in forex that sometimes I interchangeably use forex and euro. Nonetheless, so we are talking about the forex pairs, right? So in the forex pairs, I'm pretty sure most of you are aware that we have a pair of a currency pair clubbed against another currency, right? So we have a euro and we have a dollar. For example, in this particular scenario, we had explained it in brief detail. What is the reason that people are, how people often ask me, like, Harsh, what is the reason behind the forex markets allowing traders to take longs and shorts? And the reason is this: as you can see, there are two currencies which are pegged against each other, correct? It's the euro against the dollar. So if you are buying the euro, you are indirectly selling the dollar. And if you are selling the dollar, you are indirectly buying the euro. That is the reason you are allowed to take longs and short. I'm pretty sure when you look at the stock, for example, D-Dave Plastic, right? Just to give you an understanding, when you're looking at D-Dave Plastic, it is a stock. Generally, for a stock, you want to purchase a stock and you want the price to appreciate so you can make money, correct? But when we are looking at a forex pair, when we are looking at the forex pair, we are looking at two currencies which are pegged against each other. So indirectly, directly or indirectly, if you are buying if you are buying a pair, remember the first pair is the base pair and the second pair is the reference pair. So I will just keep it simple. If you are buying the euro, you are indirectly selling the dollar. If you are selling the euro, you are indirectly buying the dollar. These are some technical terms which we will be using. I'm pretty sure most of you are aware. If not aware, you can always comment down in the box, and I can, keep certain live streaming sessions which will be dedicated to talking more about a particular concept. All right. Nonetheless, we are talking about euro dollar. Since we are looking more from a technical analysis point of view, the major crux when it comes to technical analysis is that no matter whether it is euro dollar, no matter if it is Nifty, no matter if it is Reliance, we follow charts, right? We follow prices that are shown on the charts, especially candlesticks, right? How these candlesticks are reacting, what are the technical, what are the different forms of technical analysis. People might be aware of technical analysis such as resistance that we can see over here, or we can look at let me see, let me identify for you, or areas such as support, or we have certain concepts which are including trend lines, correct? Where prices are holding and the moment prices are breaking out. Let me talk about this. So the moment prices break out from a trend line, we could see that yes, in terms of prices being bearish, they eventually turn to becoming bullish, right? So there are many terminologies, and we have been discussing this in detail during the entire week. Remember, we have these live trading sessions every single day. So each day I would be focusing on a small concept and talking more about it. On Monday, we were talking about the basic technical analysis terminologies. On the second day, that is Tuesday, we were talking about mid level technical analysis. Yesterday, which was Wednesday, we were talking about advanced technical analysis. And today, our focus is shifting towards, giving a more clearer aspect into forex and gold trading, and how these markets have an upper hand when it comes to the advantages when compared to the Indian share market. So do not worry if people are not able to understand, or people who are thinking I'm being a little too basic. I get the point, but since we are having it on a daily basis, we can, categorize and chunk it down in terms of compartmentalizing, so that we can provide you with with content which is useful, correct? So many other points. There was another. Let me go back to my web page. In terms of some other points which I wanted to showcase in terms of what are, the plus points. We did talk about some of the major plus points when it comes to the forex market, but some of the other positive points which also should be taken into consideration. Yes, it's a 24-hour market, transparency, right? So we have these markets where we have trading called as over the counter. So there is no problem when it comes for you taking a trade and not getting filled. Remember, the markets are so huge, the daily liquidity, or the daily, turnover is all, the daily exchange in terms of monetary value exceeds 7 trillion. So you can be rest assured that your orders will be filled. Many people have this doubt, especially in the stock market, where they, for example, they wanted to enter at 100, but they were able to enter only at 105. So you miss 5 rupees, right, worth of profits. So that is the meaning of transparency. Both rising and falling markets that I had explained to you, you can take trades when the markets are bullish, and you can take trades when the markets are bearish. In terms of accessibility, it requires lower investment. So compared to the Indian stock market, which requires huge amount of investment, it is comparatively easier to get into the forex markets. Leverage, as I discussed, we get a generous leverage of 1 is to 100 at the minimum. Volatility, as I said, forex pairs are more volatile when compared to the Indian stock market. The blue chip companies are less volatile, but if you are looking for opportunities in the small cap and mid cap sector companies, they might be more volatile, right? More susceptible to fluctuations. We talked about liquidity, how almost a 7 trillion daily, transactions are being, carried out. And remember, we are talking about $7 trillion, right? Not rupees. And the low cost of trading. So these are certain advantages. Even in terms of non-standardized contract size, this is another crucial important that I wanted to focus on in the English share market. If you are buying a share, you have to buy a whole share. In terms of, you can buy one share, you can buy two shares, three shares, and so on. You can never buy 1.25, right? I mean, a share is a share. A share is an ownership of a company that is providing you a share for, for you to in terms of you purchasing a stock. So you can only buy whole values. But when it comes to the forex markets, you can go, either at point 0.1 of contract size, or point 0.5 of contract size, or one standard contract, or 10 standard contracts. So it is very flexible, and there are certain position size calculators that are found on the internet. Let me showcase you one of them, right? Since we are talking about these about the position sizing, let me talk about. So we have certain position size calculators which will be very important to us. For example, like I said, the entry to Forex is kind of on the lesser side when you compare to the Forex stock market. The stock market is in definitely going to be on the expensive side because you require huge capital, right? When it comes to Forex stock trading, but in Forex trading, the barrier to entry is less. So, for example, if I'm talking about $10,000, right? If I'm risking 5% per trade, and I'm giving you an estimate illustration, right? That I'm going to be risking around 50 pips. Pips is, how we call points or ticks in the England share market. We use the terminology of pips, right? In the Forex market. And for example, if I'm trading to euro dollar and if I click on calculate, it showcases that I can be taking a trade of zero point 0.8. This is the benefit of forex trading. Unlike a stock where either you can buy one or two or three or multiples of stocks, but you cannot buy 1.5 or 1.25 or 2.1. But in forex, there is more flexibility when it comes to calculating and deciding what size you want to go. We have even different forms of lots, right? We have standard lots, we have mini lots, we have micro lots. We had talked about it in detail, but for people who haven't attended those live streaming sessions, lots are basically monetary values of how much a price moves, right, in a particular direction. So we have micro. Let me type it out quickly. We have micro contract. We call these sizes in terms of contracts, right? So we have micro contract, then we have mini contract, and then we have, okay, let me show it to you on trading view, and then we have standard contract, right? So in terms of contract sizes, remember these are sizes, right? Let me write that too. So the position size, right? So when it comes to contract, with every pip either going in the positive territory or in the negative territory, right? Whether it's going up or down, with every pip movement, you are paying, or you are making or losing 10 cents, right? When it comes to middle contract, with every pip movement, right, in your favor or against your favor, you are either making $1 or losing $1. When it comes to standard, with every movement of price in your favor or against your favor, you are making $10 or you're losing $10, right? What I'm trying to say right now, if you can look at the price, we are sitting at a current price. Remember, the stock market is closed, but the forex markets are running. Like I said, it's open 24 hours a day, 5 days a week, right? So as you can see, the current price is 1.05310. If price falls down to 1.053, or sorry, 1.0529, right? It falls down by one pip, and if you're trading micro contracts, you will be making or losing 10 cents for every pip of movement. But if you're taking mini contracts, right, whether it is 1 mini, 1.2 mini, 1.3 mini, 1.5, 2.1, you get it, it is variable depending upon how I had showcased you, based on the calculator, right? Putting in the inputs of what your account size is, what is your entry, what is your approximate stop loss level, you can calculate the position size. So when we're looking at mini contract, if the price rises to 1.0531, and if I'm going long based on one mini contract, I will be making $1 for every one pip of movement, right? If I'm taking standard contracts, with every pip of movement, I will be making $10. So that is the power. When you combine the usage of contract sizes along with leverage, right? Remember, we had talked about leverage. You are getting a leverage of 1 is to 100. That shows what? If I have a $10,000 account, what will be the value be? I will get a leverage of how much? So now let me put the commas. You will be getting, a leverage. Two, three, four, one, two, three, four, and two zeros. So with a $10,000, I'm able to get a purchasing power of almost 1 million, right? That is the power of leverage. Whatever your trading account size, position size is, multiplied by 100, and that is the purchasing power. But remember, with great leverage comes great responsibility. It's very important to be clear and to make you aware, because we want to, keep you updated in terms of what is necessary. So you have the power to take trades. You have the power to use leverage to make more money, to make more profits as well. So in terms of having a quick summary, because today's day has been more of a transition phase where we did talk about technical analysis in the last three sessions, based on Monday, Tuesday, and Wednesday. Today's third live streaming session has just been in order to get a little more in depth into what forex is and how it is better compared to the Indian stock market. Correct? We have discussed all the points. I hope you are aware about the points. If not, let us quickly have a quick look in terms of what are the advantages, what are the points. A quick look, yeah, not taking much time. Currencies, the trading hours are very crucial, where you're getting 5 days a week, 24 hours a day for forex, but in stock market only limited to the trading hours of the stock market timings. Leverage is higher in forex. Leverage is almost zero in stock trading. Volatility is high in forex. Volatility is kind of considerate or less in the stock market. Liquidity, daily trading volume exceeds 7 trillion. When, if you're looking at the English share market, it only comes to around hundreds of thousands of crores, correct? Um, and the cost of entry is much less in the forex market compared to the stock market, where you require huge funds, correct, for trading. Advantages of forex, we were talking about flexible trading hours, low barrier to entry, profit from both bullish markets and bearish markets, right? Rising and falling markets, high liquidity. Based on the leverage provided, you are even able to get more liquidity, correct? We have leverage options, hedging options, right? You are allowed to buy and sell on the same product on the same platform, unlike the English share market where you cannot hedge, or if you want to hedge in the English share market, you have to hedge it on another product. So it becomes quite complex when it comes to the English share market. But in the forex markets, we do not have any such restrictions or limitations. We can buy and sell. Low trading fees and a lot of support from the community members, because the forex markets are ever growing. Everyone wants to be a part of forex market, so there are a lot of community members. We ourselves are a community. By if you think about it, dolphin markets itself is a community which is building this current platform of live streaming sessions to showcase our talent and make you hop onto our platform to understand the benefits of us providing hot stock recommendations and providing you services in the forex and gold markets too. For those who are asking, Harsh, whether we will be provided with opportunities in forex and gold, the answer is yes. We will be providing to you in the near future, as in how we have more people who are being a part of us, joining our beautiful community. We will start with the process of providing you with opportunities in the forex and gold markets as well. We did look at how the charts are looking in terms of the forex pairs and in terms of indices. What are the differences when we talked about certain stocks? It could be any stock. In this particular example, we are talking about DDAV. How DDAV is a stock. DDAV is providing you with the opportunity to purchase a stock at the price. So you are purchasing a part of the company, and that is the reason the markets generally allow only to go long, correct? You cannot short, and if shorting is allowed, it is only intraday. But when you're looking at the forex markets or the gold markets, you are allowed to go long and short. And I had also explained to you why, because there are two currencies which are pegged against each other. So if you're buying the first currency, you are indirectly selling the other currency, and vice versa. If you're selling the first currency, you are indirectly buying the second currency. That is the reason you can go long and short. One more point that I wanted to cover up was in terms of the gold markets, we always are looking at a similar structure that is followed on the forex markets too. Like you can see on top, we have the XAU against the USD, and that is the reason even for the gold markets we can buy and sell. Correct. So if you are buying gold, that is XAU, you are indirectly selling the dollar, and if you are selling the gold, you are indirectly buying the dollar. Right. So these are how the gold markets look. We always have them pegged against the dollar. So the gold and dollar have an inverse relationship. If the price of gold is appreciating, the price of dollar is depreciating. And if the price of gold is depreciating, the price of dollar is appreciating. It has inverse correlation. Correct. I hope people have understood. I hope people have got a good amount of understanding. Yes, today was more of a basic live streaming session where we wanted to showcase the potential, right, of what the forex markets have to offer, and when compared to the Indian stock market, how we are able to, provide you with much better opportunities when it comes to the forex markets. I hope people are able to understand. I hope people have learned, have been able to, absorb a good amount of knowledge. The markets, from a technical analysis point of view, remain the same, right? We had even showcased you by showing that yes, even in the markets, even in the forex markets, the trading terminologies, the trading concepts, they all remain the same, right? Such as support and resistance. Then we have even moving averages. So moving averages where prices are, how well they react to the moving average. So we will be talking more in detail as and how time progresses, as and how we have more people who are becoming a part of dolphin markets and who are willing to, take our services and benefit from them. So hopefully I will see you for the next live streaming session tomorrow. Yes, one more important piece of information. Tomorrow the markets are closed, right? Let me showcase it to you. The stock market is closed. Let me showcase the details. Uh, so the Indian stock market will be closed tomorrow, right? So just be aware, we will be having our live streaming sessions, but to be clear, in terms of tomorrow, um, let me just make sure. Let me check it out on the website itself, right? So tomorrow being the 15th of November, as you can see, we have Guru Nanak Jayanti, right? So Nanak Jayanti is tomorrow, and yes, the stock markets will be closed for tomorrow. But nonetheless, like I always say, when Harsh is here, there is nothing to fear. We will be still talking about, maybe we will use the opportunity to talk more in depth about the forex markets, right, and the gold markets as well. So hopefully people are aware. To those who can see my screen, tomorrow being the 15th of November, tomorrow is Guru Nanak Jayanti, which is a Friday, and the markets will be closed for tomorrow. So tomorrow our main live streaming sessions will be based more towards, the educational and the technical analysis point of view. All right, hopefully I will see you all tomorrow. I hope you all have a great evening as well. All right, then it's a sign off from my side for today. Namaste, and I'll see you tomorrow.